What's up, gang? John Johnson here once again. Johnson Signature Group, Exit Platinum Realty, and we are here once again with Joseph Falla, who is going to go over some money. So how do we get the money,
Some
right?
cha-ching, cha-ching, cha-ching.
That's it. That's it. How do we get the money? But not money to spend on a new car or some clothes or um, some jewelry or some nice shoes or some retro J's. Most of you know what I'm talking about. But money to go towards purchasing a home. So, as you know,
An investment that
mhm,
appreciates.
appreciates exactly. Not something that goes on your feet. You walk outside, it rains, and then it's over. So, as we
Depreciates as
continue
soon as you
on,
sign the contract.
exactly, right?
Before it
Exactly.
even leaves the car lot.
Exactly. Right. So, part of our ongoing series, Home Buyer and Sellers Playbook, I am going to hand it on over to Mr. Falla. Joe, what you got for us this week?
All right, John. So this week I'm going to go over the New Jersey Home Mortgage Finance Association's $10,000 down payment assistance program. So there's a couple of versions to this program. What I'm going to cover is the Homeward Bound. Homeward Bound, there's about three different programs. They're very similar. Homeward Bound, I think, is the easiest to attain, and you'll see what I mean on the actual presentation. All right. So what New Jersey Housing Mortgage Financial Agency has done is they've created this program. It's a forgivable loan, which means all you have to do is live in the house for 5 years without selling it, and the loan is forgiven. It's a second loan on, basically a second lien on your property until the 5 years comes around. Then it's forgivable. All right. So here we go. This is the actual program itself. All right. So, sorry, skip ahead here. All right. So, as I said, it's for first time home buyers that have not purchased a home in the last 3 years. It has to be located within urban target areas. I have the map for that. It's actually, I can send it out as a link at the end of the on Instagram or YouTube, and you guys can actually go in and view exactly see which areas. Most of New Jersey is covered. All right. Once you purchase the property, you have to actually occupy it within 60 days, which is the normal course anyway. You must meet the minimum credit score and the DTI requirements. As far as the credit score, you go as you, they will they go as low as a 620. Okay, so that means when we run your credit, there's going to come back with three different scores. We will the middle one is the one that is your qualifier. All right. As far as DTIs, I'll show that on the next slide. It is they have a 40 front and a 50 back end minimum.
Okay, so
And
so Joe,
go ahead.
what does DTI mean, and like how is that calculated? What is DTI for those
I'm
that
going to show
are
you
new?
that on the next slide.
Okay, okay,
So basically, if we I can go right here. So DTI right here, you see this is a actual qualification calculator that I have, right? Affordability calculator. The DTI is what I have here, right? So I put on this calculator. I have access to this. I do free consultations, and we go over to see exactly what you can afford. The DTI is essentially your future mortgage payment divided by your liabilities, um, and the actual mortgage payment that you're going to have in the future. Okay. So what New Jersey wants, they don't want you to basically be what is it, equity rich and cash poor, right? So you'll be able to afford your mortgage, but you won't be able to afford your um, water bill, electrical bill, all the other things that come along with purchasing a home, right? The updates
mhm,
that you may need it. They don't want more than 50% of your gross income to go towards your mortgage. So essentially, when we do the calculation, again, your mortgage payment um, uh, divided by your actual liabilities, credit cards, student loans, um, your car note, okay? Um, all the other things they don't count it. Those are the couple few that they count right off the top. Um, those all together, you divide them up. As long as it's less than 50%, you qualify. There is a front end, but most of the time if you're below 50 on the back end, you'll qualify on the front end. They do have exceptions. So if you're over by a percent or two, we send it over to the actual New Jersey housing, and they will see if they will provide you. You have to give them a good reason, but they will provide you an exception. Okay. So just to go back, and the last uh, eligibility is that you cannot go over 140% of the median income. So let's take Essex County. Let's say the median income is 100%. That means the first borrower and the second borrower's total gross income cannot go over 140,000. Make sense?
Okay. So you're
Okay. And
saying,
it varies from county to county.
okay. So I think there was a Freudian slip. So if Essex County's median income is $100,000 per household, then a couple cannot make more than $140,000.
Right. They will allow
Okay.
you to go over 40% of the median. That's just I'm making up that number. It's close to that, but like again, it varies from county to county.
Okay. Now, would you have a breakdown of the median incomes for areas that our viewers are interested in purchasing in?
I'll put that link in the description.
Okay, cool.
I'll put
Cool.
that in there as well. All right. So, any questions?
No
No, went
questions so
kind of
far. It's
fast there. All right,
pretty
cool.
good.
So,
Pretty good.
if we go back to the affordability calculator, right? So I took um 90,000 as a number, right? So let's say the first borrower and the second borrower make a total gross income of $90,000, right? Now, here's another interesting part. The interest rate is actually set by New Jersey, by the agency. My bank does not set the actual rate. So I'm just using a guesstimate of what it could be, you know, on today's rates. By the time you're ready, it could be lower, it could be higher. So this is just a number that I set in there for now, right? It's a 30-year term. The down payment would be 14,000. You'll see that makes sense at the end. Monthly obligations, that goes back to what we were talking about. This would be your total. To get to this number, your total cannot exceed $500. So that's your car payment, student loans, credit card debt, um, or any other monthly obligations. Again, not your credit card, gas bills, any of that stuff. Any personal loans that would go against your monthly obligations. All right.
Okay.
I put $9,000 as the taxes. That's about an average of a Essex County or a Hudson County home. All right. Homeowners insurance, I put at 1,100, and there's your DTI. So we take this monthly obligation, we take what the actual mortgage payment will be, and we come up with
Mhm.
that DTI. All right. MI is basically your mortgage insurance. If you're putting less than 20% down, you do have to pay mortgage insurance. And here's one thing: if you have, so a lot of people go, "Oh, I don't want to pay mortgage insurance. I don't like to pay." I heard a lot of negative things about it. Well, here's the thing: they're not going to give you free money if you already have the money, right? So if once you show you, and you do have to go, we do require for you guys to show 2 to 3 months bank statements. Now, if we go start digging and we see that you have $20,000, I'm sorry, 20 or $30,000 to put down on a house, you're not going to qualify for this down payment assistance. It's for people in need, not if you already have it. Now, if it's in your 401k pension, you actually don't have to pull any money from there. It's something that you have liquid in a bank account. All right.
Okay, so when you say liquid, that means they have a balance in a checking or savings account for $20,000. But
Right.
if there's something sitting in the 401k that they contribute to for work, that's not necessarily just sitting there at their disposal. Because I mean, there's a process you have to go through to take that from your
Exactly.
retirement savings.
Anything that you're going to be using for your retirement, they will not force you to, take that money out as a loan or a forgivable loan, whatever it may be, to put towards the house. This is something. So if you just got a, tax season is right around the corner. You got a refund for $40,000, and we see that refund going into your bank statement. They're obviously not going to approve you for this particular loan.
Okay.
All right.
Okay.
So again,
Yeah.
this is the mortgage insurance. So if we take all these numbers, you can qualify for a house that's $378,000. And this is actually, we're a little bit less. I went a little conservative. We're at 40%, 48% on the back end of this actual ratio of the DTI.
Okay.
So what do you think? Is this something that's affordable, and from the market better than me? Someone says, "Oh, in New Jersey, it's not possible to buy a house for 300 less than $378,000."
In today's market, August 22nd, 2022, $378,000. A budget of that magnitude will probably get you an extremely small home
Okay.
um, in certain counties. Um, but I would think, well, if we talk about Hudson or Bergen, it may not get you anything, right?
Okay.
If we talk about Union, Essex, you can probably get something decent, a smaller home. Um, you might have to put some sweat equity into it, meaning you might have to make some repairs to it. But 378, or let's just round up to 380, that's a fair budget. That'll definitely get you in the door to something that you actually own versus you paying rent consistently and really not getting any kind of equity out of it. 380 would definitely get you a townhome for sure. But if we're talking
Okay.
about a single detached home, it's a bit of a challenge because everyone is after something that's single, detached. You don't have neighbors sharing a wall with you or what have you. Um, so yeah, but it's doable. It's not impossible, but
Well, here's
it's
the thing.
definitely
It
doable.
doesn't I didn't want it to make it seem as if 90,000 is, the break even point. You know what I mean? You can go
Right,
above that. You can go above that, but it's all dependent again on your credit, your monthly obligations. Not again, not the credit actually. Not, the credit is really bad. 620 is below way below the national average, and you can
right,
qualify as long as that middle score. So you can actually make more and qualify for a bigger house. But this is just, you know, giving you a good gauge of what you would need to qualify or down payment.
right. Right. And Joe, just for the people that are watching, I mean, they're looking at these numbers saying, all right, with $90,000, if my payments for towards debt are no more than 500, they're looking at this 380 mark. But Joe, if they're looking to buy a multifamily, that would kind of increase this budget, wouldn't it?
Absolutely. Now, we would still the monthly obligations would be a factor, but you can buy up to a 4 unit with down payment assistance. And you were saying something about fixer upper. You cannot use this for a 203K loan, which is basically an FHA loan where you buy the house and we will include the cost to repair the house, right, to your standards. Okay. But which doesn't make sense to me, but who's to argue? You can use it for a new construction. So if you're looking to buy a new home, if you're looking to buy a house and build it from the floor up, you can use it for that, but it cannot be combined with a 203K loan.
Okay. And for those of you that missed the 203K discussion, that was last week. So feel free to revert back to that recording that we had last week. I'm glad you mentioned that, Joe.
Yeah, so this is pretty much the gist of the program. Now, the elephant in the room, right? A lot of I'll say a lot of agents and a lot of banks don't like to work with the with city agencies like or government agencies, right? Because they feel that it's going to extend the loan process another 2 to 3 months. It's not the case. My bank will actually it does the entire process. We underwrite it. We get all the clear any conditions that may come up. We make sure the package. We basically package it up, put it in a bow, and we hand it off to New Jersey. New Jersey from there will review our package and then give us a clear to close. From what they're telling us, it might extend the normal loan process, another a week. But what's the normal loan, right? There's always something that's going to come up along the way, right, John?
Right.
Um,
Absolutely.
Open permits can come up. A contract, some of the contract might have been written incorrectly. There's issues with putting title. All sorts of things can come up. So I don't see how waiting an additional week to get this clear to close from New Jersey would hinder anyone from not wanting to do this program, whether it's a bank or a real estate or a listing agent.
Right. And I think you hit on something. There are some agents out there and some lenders, as you just mentioned, that shy away from programs like this because it's a process, right? It's a longer than normal process, right? And some agents may not necessarily understand all the components of a loan like this. So I would definitely recommend to those that are watching that are interested in a program like this, interview and vet, your lender, interview and vet your agent to see, number one, are they going to allocate or commit to you and your long-term strategy, which is to, number one, get the money if it's available to you,
Right.
and stay with you throughout the long haul. So the end result is, hey, I had a great agent. They showed me a bunch of properties. We went through this process. I received some down payment assistance. It took a little longer, but you know what? That agent and that lender, who in essence is your team, got us through from start to finish. You're not going to find a lot of lenders and a lot of agents like we've just mentioned that will actually engage, with something like this, because a lot of times they'll pass you off to someone else because they just don't want to commit to it, which is a shame.
You said something very important there, John, the team. If
Yeah,
you're a lender, and you can ask, well, I guess you really can't ask, you don't really know much about the bank, but if your lender and your real estate agent are not talking or not communicating, either calling or texting, video chat 2 to 3 times a week after your offer has been accepted, I don't want to be Mr. Negative, but something's going to go wrong, because it's all about the team. We're both working for you as our client, which a lot of people fail to realize, and we have to be communicating with the seller agent as well, all through the process. If there's not a group chat going on between you as the buyer with your real estate agent or loan officer, something's going to go wrong. Something's going to come up, because there's no communication. It really is, in this market, it's all about the team.
absolutely. Absolutely. Buyer, seller, agent, realtor, attorney, home inspector, everybody on your team should always know what's going on throughout a transaction, what's coming next, what just happened, etc. Good point.
And there's also the attorney on both sides, right? There's two different attorneys. They'll have to be communicating. You have to make sure they're all in communication. You have an email chat going on. It's a lot of pieces to the puzzle. It's not
Yeah,
just putting in an offer and telling me, tell me when to show up to the closing date. It's really not that. It's a lot of pieces to it. And when you got the right team, you have the experience. When those hiccups do come along, you have someone that knows what they're doing that's going to be able to fix it.
absolutely. Absolutely. And for those of you that are watching, don't worry, because we're going to have more of these where we're going to break down the team and bring in other members that could possibly be on your team and talk about their role. Again, this is the playbook. So Joe, we got this down payment assistance program, which I think is awesome. There are some restrictions here and there, but nonetheless, it's free money.
Free
You
money.
know, free money, and it extend the deal just a week. We're not talking months. We're talking about a week or so.
Another piece that I've heard is, oh, by the time the government's not going to reach out to you during the process. They're going to tell you to send the file, and then they'll reply back. By the time they get the file, they're probably out of funds. I've been on the phone. I'm sorry. I've been on some conference calls and some trainings with New Jersey the last couple of weeks, and their exact words that they have unlimited funds at this period. So there shouldn't be any issues about, oh, sorry, the program's been canceled. Try again in a few months. That should not be the case. That
That's
should not be
awesome.
the case of why a seller agent wouldn't want to accept an offer that has down payment assistance with it.
That's awesome. And to the viewers, it's August. So let's not say, oh, well, I'm not really ready to buy. I'll wait till I get my tax return next year. Well, we just talked about the fact that you can't have a bunch of money sitting in your checking and savings account. Okay. Well, let's just tell it like it is. You got to look broke, right? In order
Exactly.
to get this free money. So if you're going to do it, guys, if you're thinking about it, give it a shot. Give Joe a call. Give me a call. Give it a shot. Worst thing that can happen is say no, you don't qualify for it. But if you do get it, guess what?
What a lot of people don't realize is until there's a lot of pieces to it. You don't have to come up with anything. You just have to essentially fill out the application, show me you have at least the initial down payment and closing available for whatever particular house you're looking to purchase. You don't have to come out of pocket at all. Everything is, you can cancel any part. You can back out. It's happened to the both of us, right, John? You
Yeah.
can cancel out at any point. Um, there are, once you start putting in the appraisals, then you're paying that $750, $800 for an appraisal. It's non-refundable. Yes, at that point you need to decide: do I want to continue? Am I willing? Am I really? Do I feel comfortable with this mortgage payment? Do I like the house? Is it in the neighborhood? Is it in the school district that I like? At that point, it is, I think, a point of no return, because now you're starting to shell out some money that's non-refundable. But anything before that point, you can cancel at any time. There's no cost to it, just the cost of time.
Absolutely. And obviously, realtors like myself will help guide you through that process and let you know when it's time to spend money. So we're not going to spend all our money up front. We'll do it when the time is right. And if there's, an opportunity for you to back out, I'm going to tell you that. A lender like Joe is going to tell you that as well.
Exactly.
All right. So, Joe, once again, how do you get a hold of you, man?
Joe Does Mortgages on Instagram, YouTube, Facebook, or if you want to text me or call me, set up a free consultation. I'm at 908-669-9091. That's the hotline. And you, John?
Hey, you guys see the hashtag right there. Hashtag Johnson Signature Group anywhere and everywhere across social media or Google, or you can reach me direct 908-338-0639. Joe, once again, appreciate you, man.
As always, John, see you next week.
All right, guys. See you next week.